Welcome. Today we will go over study problem 4-2 on page 132 from our textbook. Let's first have a good understanding of what's going on in the problem. We are provided with some key financial information, including sales value, total assets, and total liabilities. And we are also provided with two other crucial information, including company's debt rate and its tax rate. In fact, we are also given with one additional piece of information, which is operating profit margin. So based on all these things, what were the company's operating profits and net income? So the best way to start is to probably use the information about operating profit margin to come up with the operating profit for the firm. So recall that the operating profit margin equals operating profit, or operating income I should say, operating profit divided by sales. Well, in our case, we are given that operating profit margin is 12%, so 0.12 equals operating profit is our concern, so let's first leave it as it is, and sales is given as $65 million. So all we have to do now is to do cross multiplication, and once we do our cross multiplication, so we can assume there's an invisible 1 here, and we do the cross multiplication, and we get that operating profit equals 12% times $65 million, which is equal to $7.8 million. So that handles the first part of our problem regarding the operating profit. Now in the second part, we need to also come up with the net income. So for the net income, we will basically start constructing our income statement. That's kind of the task that we have at hand. So for that, so what we will do is let me open a new page, and on that new page let me input some of the data that we previously have. So okay, so on this new page, let's see what facts do we have so far. So we already have sales value in the amount of $65 million, and we have no clue about what cost of goods sold or operating expenses are. However, one thing we know is once we deduct these numbers, which we don't know what they are, we come at operating profit, and we just calculated that number to be $7.8 million. So it's not too difficult to deduct what this combined cost of goods sold and operating expenses are. But for the purpose of our problem, we don't need that, so we can just go ahead and skip that. So let's move on. Let's keep constructing our income statement, because I know that at the bottom of our income statement I should get to net income. To be precise, the next item would be interest expense that I will have to calculate, and once I have that number, I would subtract it from operating profit to get taxable income, or earnings before taxes, and then I will calculate my tax liability, deduct it from our earnings before tax to come upon our net income. And that's what I need for my problem. So let's first figure out interest expense. So that's the item that I need, and we are provided with the debt rate. So let me go back to the problem. Yeah, so the interest rate, so according to our problem, the interest rate on the debt is 6%. What is our total debt? Total debt is our total liabilities of $20 million. So using this fact, let me just do it underneath here. So therefore our interest expense equals the debt rate, and so the interest rate, which is the 6%, times the total liabilities of $20 million. So once we multiply those two figures, we should get $1.2 million. Now I can go to my next slide again, and I can enter that into my calculation. So we get $1.2 million, but that needs to be subtracted, and 7.8 minus 1.2 will give us $6.6 million. Okay, so that's my earnings before tax. Now I need my total tax amount. Going back to the previous slide, we just realized that the tax rate is 30%, 30% of our earnings before taxes. So going forward, 30% of our earnings before taxes of $6.6 million would give us, so let's do it, let's open a separate box here, and inside that box let's calculate our taxes due. Taxes due equals, our tax rate is 30%, and our earnings before taxes is $6.6 million. And once we multiply these two numbers, we should come at number $1.98 million. So that's our taxes due. We can input that into our income statement, $1.98 million. Now finally our net income, doing this difference, will be $4.62 million, and that's what we needed. Just to summarize what we did so far, we were able to calculate our operating profit using the operating profit margin, and we were able to calculate our net income using constructing basically an income statement. Now for the last part of the problem, we are, let me go back, we are told to find the operating return on assets, and as well as so operating return on assets, and I also need my return on equity. So moving forward, so let's calculate these. So my operating return on assets would be equal to operating income divided by total assets. Well, we just found out that our operating income is $7.8 million, and our total assets $42 million. So doing this division, I should get 0.186, or you can simply write 18.6%, the usual notation that we would use. And finally, we need also the return on equity. Our equity, so we need to have a look at what equity numbers are, but let's keep in mind that our net income is $4.62 million. So going back, in fact I can answer that question on this slide. So our equity is, so we are actually missing that. So let me open some space here to make a quick calculation over here. Okay, so let's open this little box here. So if you recall, equity is a residual account. Equity would be equal to total assets minus total liabilities. So in our case, total assets were $42 million, whereas total liabilities amounted to $20 million. So the difference would give you $22 million. So that's the number that I would need, so to calculate my return on equity. So now in the final step, return on equity is equal to net income divided by equity. So our net income from our previous slide, we just realized it was $4.62 million, whereas our equity, which we just saw, is $22 million. Therefore, we would get 0.21 or 21% as our return on equity, and that would pretty much complete our solution. So we are basically done.